For case background, these are the overview and differences between tax and zakat. Firstly is tax, which is an obligatory payment placed on individuals and company by the Malaysia's Inland Revenue Board, or in another name is LHDN, and is regarded as a legal obligations to contribute to the country's economy. Then, it can be charged to income collected both in Malaysia and from outside Malaysia. Finally, Malaysia's taxation system is a progressive tax rate system, with rates are determined based on the income level ranging from 0% to 30%. Then, for zakat, it is an obligatory donation made by Muslims to contribute some of their wealth to the Asnaf group. Its purpose is to alleviate poverty, promote social economic justice, and to purify one's wealth while fulfilling their religious obligations. The annual zakat rate is usually at 2.5% of wealth, depending on the type of zakat, such as zakat on income and zakat on savings. Here is the fictional family we use for our case study. Ahmad Nadir bin Abdullah is the breadwinner of the family, and he has a wife named Nur Amalina and a son named Mikael. He works as an audit manager in Shah Alam and stays in Shah Alam, Selangor. He has 5 types of income, which are employment income, business income, rental income, dividend income, and also royalties income. Here are the income and expenses for the fictional family.
We have 5 main income sources. First, employment income, which is the salary we earn from working. Second, business income, which is come from running a business or trade. Third, rental income, the money we get from renting out property. Fourth, dividend income, which is profit shared by companies to their shareholders. And lastly, interest income, which is the return we earn from saving or loans.
I'll be presenting part 2.2 of our group assignment, which is about calculating the gross and net income for Ahmad Nadir. First, we calculate his statutory business income. Nadir's cafe business shows a net profit of RM35,000. We add back non-allowable expenses such as RM3,000 depreciation and RM2,500 private electricity bills, giving an adjusted income of RM40,500. After deducting capital allowance of RM5,000, the statutory business income is RM35,500. Next, we move on to statutory non-business income, which consists of 4 types: employment, rental, dividend, and royalty. First, for employment income, Nadir earns a salary of RM120,000 per year plus a bonus of RM8,000. He also receives RM9,000 for a domestic servant allowance and RM8,000 as an entitlement allowance. Altogether, his statutory employment income is RM145,000. For rental income, Nadir receives RM25,000 gross. After allowable expenses of RM3,000, his statutory rental income is RM22,000. For dividend income, he receives RM10,000 from Bursa Malaysia and RM25,000 from Tabung Haji. Under Malaysia's single-tier tax system and specific exemptions, these dividends are not taxable, so his statutory dividend income is nil. For royalty income, Nadir receives RM20,000. According to the Income Tax Act, the first RM12,000 is exempt, leaving RM8,000 taxable as statutory royalty income. By combining his business income, employment income, rental income, and royalty income, Ahmad Nadir's total aggregate income comes to RM210,500. In conclusion, part 2.2 shows how we systematically calculate gross and net income while separating business and non-business sources. This forms the foundation for the next step, which is allowable deductions and tax planning.
Ahmad Nadir is entitled to a total of RM34,700 in tax relief. These include the basic salary relief of 9,000, spouse relief of 4,000, and child relief of 2,000. He also claims 7,000 for EPF and life insurance contribution. For medical-related relief, he gets 1,200 for his child's medical treatment, 500 for his own medical checkup, 5,000 for his mother medical carer, and 2,000 for supporting medical equipment. Education and lifestyle relief include 3,000 for his child's kindergarten fee and 1,000 for books. Altogether, this relief reduces his chargeable income significantly, lowering the amount of tax he has to pay.
Category of taxation involved. Ahmad Nadir's income is divided into 3 main categories. First is individual income, which is include his salary, bonus, and allowances. Second, business income from his cafe with an adjusted income of RM35,000. And then third, investment income such as rental and dividends. Some of these are taxable, while dividend and royalty are exempt. Although not a separate income category, deduction also play an important role. For example, Ahmad Nadir RM2,000 donation to the National Cancer Society Malaysia is deductible because it was made to an approved institutions. Ahmad Nadir's total aggregate income is RM210,500 ringgit after deducting the donation and relief of RM34,700 ringgit. His chargeable income become RM173,800. The tax on this income is RM27,850 ringgit after rebates such as zakat and monthly tax payment. His finally tax payable is 15,577 ringgit 10 cent. In conclusion, proper tax planning helped Ahmad reduce his taxable income and manage his final tax liability more effectively. So that's all. Thank you.
For the suggestion for tax relief, rebates or incentive that can minimize tax liabilities, the first one is your individual tax rebate. This rebate directly reduces the tax payable and unlike deduction that reduce taxable income such as the zakat rebate, where you can claim zakat payments either deducted through payroll, paid directly as rebate on your tax liability. The second one is broader non-tax incentive. This includes measures that either reduce expenses or offer support outside of traditional tax channel and includes an incentive aimed at individual and business. And the third one is electric motorcycle rebate. You can get a rebate of up to 2,400 ringgit. Nation has been tax extended for the purchase of locally assembled electric motorcycle. For legal strategies to optimize tax payment, the first one is by strategic income splitting, which is to reduce your effective tax rates is only allowed within the permitted limits, such as filing separate assessment for spouse if both have income, which can lead to lower overall tax. Second one is passive income wisely. Malaysia currently does not impose capital gain tax except for property gains under RPGT, such as shares, ETFs, and capital gains from unit trusts, which are not taxed. And the third, donating to approved charities. By donating to IRB approved institution, up to 10% of aggregate income is tax deductible. The best way is to schedule donation before the end of the year and request an official tax receipts.
Next, zakat or income refer to the earning or mostly received from various sources. The main type of income subject to zakat include salary and wages, freelance and professional income, income from investments, and also gift or donations. All these must be considered when calculation zakat, which the rate set at 2.5% after deducting basic needs and expenses.
Next is zakat on savings. Savings include money kept in bank accounts, fixed deposit, ASP, and other financial institutions. Zakat on savings is calculated based on the lowest balance within 1 year, as long as it meets the whole and exceeds the nisab after deducting interest or dividends. The examples of savings subject to zakat such as deposit in banks or financial institution, ASB, and shareholding.
Next, for example, the total income in this case was 153,000 ringgit after deducting household kifayah of 18,684 ringgit and EPF contributions of 13,200 ringgit. The balance was 121,116 ringgit. After deducting 18,000 ringgit for haji saving, zakat was calculated at 2.5%, which come to 2,577 ringgit and 90 cents.
From the table, we can see the balance movements from January to October 2024. The lowest balance recorded is 35,000 ringgit, which is above the nisab value of 37,696 ringgit. Zakat is calculated on this lowest balance, so 35,000 ringgit times with 2.5% equal to 875 ringgit. When added to the earlier amount of 3,452 ringgit and 90 cents, the total zakat payable is 4,327 ringgit and 90 cents.
Next, one efficient way to fulfill zakat obligation is to set aside monthly saving. Instead of paying 2,577 ringgit and 90 cents all at once, we can divide it to monthly contributions of about 250 ringgit. This makes the zakat easier to manage, reduce the financial burden, and ensure the consistency while also allowing the zakat to reach those in need on a regular basis.
The second strategy to fulfill zakat on savings efficiently, then we must keep accurate records of deposits, withdrawals, and balance. This is important because zakat is calculated based on the lowest balance in the year. For example, Mr. Nadir can track his savings using bank statement, online banking like Membank to You or CIMB Clicks, or even a simple Excel sheet. Official zakat calculators from Lembaga Zakat Selangor or PPZ Naib, as well as apps like Zakat Selangor or MyZakat, also make the process easier. By keeping clear and organized records, we can avoid mistakes, stay Syariah compliant, and simplify zakat payment.
From our analysis, Ahmad Nadi's total tax payable was 27,850 ringgit before rebates, which reduces disposable income. However, zakat of 3,452 ringgit and 90 cents not only fulfill his religious duty, but also serve as a rebate to lower his tax liability. So this shows how Malaysia's system integrates both legal and spiritual obligation. His various income sources such as salary, business, rental, and royalties are treated differently under tax and zakat, which highlighting the need for recommendation. Ahmad should structure his zakat into monthly payment to manage cash flow and provide consistent support to beneficiaries. He should also maximize relief such as EPF, insurance, and approved donation to reduce chargeable income. Using digital tools like Zakat Selangor or MyZakat can simplify calculation and reminders.
Lastly, aligning his tax and zakat planning with long-term investment like tabung haji will ensure financial efficiency while meeting both national and religious responsibilities. And that's all. Thank you.